Okay, so this guy, the former CTO of Coinbase, made an insane bet that Bitcoin will hit $1 million within the next 3 months. Now, that's definitely not coming true, but I do think that Bitcoin could reach $200,000 within the next few years. And the reason why boils down to Bitcoin's upcoming halving event. So every 4 years, Bitcoin has this thing called a halving. And previous ones have brought meteoric gains in terms of price. But you know what they say, past performance is no guarantee of future results. So that's why I'm wondering, will this next halving also make Bitcoin rocket? Or is this time different for whatever reason? That's the question we're gonna answer today. And to answer it, we gotta start with understanding the halving theory itself. Like, why do some people say that Bitcoin going up is baked into its code? Well, that's because Satoshi Nakamoto designed Bitcoin so that every 4 years, the reward that you earn for mining a block gets cut in half. This makes Bitcoin have a more gradual release of its coins until its maximum of 21 million is reached. So far, there's been 3 halvings in Bitcoin's history, and the 4th one is coming up real soon in like April of 2024. Now, historically, these halving events have been big drivers of Bitcoin's price. Like both before and after the halving, we've seen big price rallies for Bitcoin. That's why this is such an important topic to discuss and analyze, because if the halving theory comes true again, then we better have the right strategy to take advantage of it. Okay, but why would the halving make Bitcoin rocket, right? Well, the theory says that it's because of supply and demand, because Bitcoin's emission rate gets cut in half. So afterwards, there's less Bitcoin getting sold by the miners who have to sell to fund their operation. If demand stays roughly the same, then the price must go up. It's simple economics. But can we assume that demand will stay the same? That is a massive assumption after all. Well, there's no guarantees, of course, but if we look at some recent trends, it's not hard to imagine a world where demand for Bitcoin goes up, let alone stays the same. Like with all the banking crises going on, a lot of people are turning to Bitcoin to keep some of their money outside the traditional finance world. Also, if the Fed pivots and turns back on the money printer, then Bitcoin would for sure rocket. And also, just look at this chart. The supply of Bitcoin that hasn't moved for over a year is at all-time highs. So there's more people holding and periodically buying than ever before. And that's super critical to this theory, because the halving reduces the supply that miners can sell, right? But you also have selling pressure from the paper-handed speculators who bought near the top and are waiting for the right price to dump their Bitcoin. So it's their selling pressure that suppresses the price of Bitcoin throughout the bear market. But what makes Bitcoin special is that it has a loyal following of holders who buy periodically and never sell. So when their consistent buying eventually absorbs all the speculators selling, then the price starts to break out into a new bull market. That's when the FOMO comes back, newbies buy back in, and the whole cycle plays out all over again. So that's the halving theory for you, but don't get too bullish yet, because there are also some good arguments against it. But before we get there, I want to show you this. This is a hardware wallet, believe it or not, and it's made by Tangem, who's also the sponsor of this video. It's a great way to store some of your Bitcoin if you want to diversify where you keep it. And this isn't like your typical hardware wallet, because you don't need a fancy device, cables, and a computer. It's literally just a card with a microchip plus an app on your phone. Tangem has completely reimagined the hardware wallet, and I'm all for it. Like, no more seed phrases. The private key is on your card, and if you lose that, you have backups too. It's also protected by an access code to prevent unauthorized access, and the chip itself is super secure. And they pretty much support every coin out there. So if you want to learn more about this, just watch my full review video that I'll link you below. Otherwise, if you want to buy one, use my code COINSIDER for 10% off. Okay, back to the case against the halving theory. So the first thing that critics like to point out is that there's only been 3 halving events in Bitcoin's history, and 3 data points is nowhere near enough to draw conclusions from. Ideally, we'd have dozens or even hundreds of data points in order to make a stronger statistical case. But also, even if we didn't have more data points, past performance still does not guarantee future results, right? We definitely cannot assume that something will happen again just because it happened in the past. Also, another argument against this theory is that it's already priced in, because everyone can see the halving coming from a mile away. It's no secret that it's going to happen in April of 2024. So even if we assume that it'll bring an increase in price, then the market will rationally front run that increase, and hence there will be no increase because of the front running. And then there's also the argument that the halving will actually drive down the price of Bitcoin. Because after the halving happens, miners will immediately start to earn half their usual Bitcoin per block. So they'll start making less revenue, and then they'll have to sell more Bitcoin to cover their operational costs. Anyways, that's a lot of food for thought on both sides of the debate. But let's just assume for a second that this next halving still plays out per the theory. And in that case, what should we expect in terms of price and timing? Well, if we grab data from the past 3 cycles, then we get this table. It pretty much shows you the gains for each cycle compared to its previous cycle's low and high. So if we assume that this upcoming halving brings us similar gains as the most recent halving, then that gets us $341,000 if we 22x the previous cycle low, and $241,500 if we 3.5x the previous cycle high. Now, those numbers probably sound way too ambitious to you, and it does to me too. But also, every halving that we've seen, the price multiples have decreased compared to previous ones. So if we take that into account, and let's say we just cut the gains in half, like 11x the low or 2x the high, then we'd get numbers like $170,000 to $138,000. That honestly sounds much more reasonable to me, and it also makes logical sense too, because each subsequent halving has less impact on the overall supply. Like the first halving cut mining rewards from 50 BTC to 25 BTC, but this next one will bring it down from around 6 to around 3. So it's a much smaller drop than before relative to the amount of Bitcoin circulating. But what about timing though? Like when should we expect to see these 130 to 170K prices? Well, if we look at this chart, we see that each halving has a pre-halving bull run and a post-halving bull run, each going for about 500 days. So right now we're already less than 400 days until the next halving. And that means we're already on the eve of the pre-halving bull run. Anyways, we've gone through both sides of the halving debate and a fun what if scenario for price. But my take on all this is that I do think we'll see the theory play out once again. And that means I do expect to see upwards of 200K for BTC in the next few years. I think the argument that this is already priced in misses the supply and demand intricacies that I pointed out earlier. Also, markets are clearly not as efficient as economists think. After all, just look at meme coins or meme stocks for proof. Or maybe none of this even matters and we're all mid-curving it with this debate, because perhaps the halving theory has simply become a self-fulfilling prophecy since we talk so much about it. Anyways, I'm personally going to be stacking much more aggressively and upping my dollar cost average amount, but I'm also not expecting a blow off top to happen again, so I won't be as moon boy with my price predictions. Let me know what you think about all this, and don't forget to check out Tangent Wallet with my discount code below.